A bank run just happened in 2023. This is a huge breaking story right now, and we're going to walk you through all the details. My name is Gav Blacksburg, aka Wolf Financial. I'm here with Evan from Stock Market News. If you enjoy these type of videos, make sure that you like the video, subscribe to the channel. We're about to get into some crazy details. Let's start off by just putting this in perspective. Evan, what are we looking at here?
Yeah, so we are currently looking at a chart showing that Silicon Valley Bank is the second largest FDI-insured bank failure in U.S. history based on total assets. Washington Mutual Bank in 2008 was the largest one. You don't want to be pulling very close to 2008 on much stuff, I would imagine, but just shows the scale, and we'll get right into it. If you actually go up on the slide, Gav, I think you're on slide 2 instead of 1. But SIVB has officially been shut down by California regulators. SVB Bank fails as FDIC takes over. The interesting point on this one is the nature of the bank. Silicon Valley Bank, I didn't really know much about it before this, but you kind of learn very quickly. They work a lot with VC startups and companies and everything like that. So 97% of the money at that bank was more than they had more than $250,000, which is the FDIC insured limit. So you could tell that a lot of that stuff will not be insured. But yeah, I think that's pretty good on this one. We can talk a little bit more about how this actually came about. Bloomberg put a pretty good article where it kind of shows what's been happening over the last 2 days. It's kind of crazy how quickly this did go down. But investors and depositors tried to pull $42 billion from the bank on Thursday, one of the largest bank runs in more than a decade. That left the bank with negative cash reserves of $958 million. So, I mean, being able to pull out $42 billion, that's a pretty massive number. And what we just saw on the last slide, they had about $209 billion of assets. So just some quick math over here. About 20% of the bank's assets were taken out in one day. That's pretty crazy. But it all kind of, we'll talk a little bit more about it. But yeah, do you have any thoughts or anything like that? We can maybe get on to the next one too.
Yeah, just a massive bank run. This obviously affected a bunch of other banks. We saw First Republic Bank, their stock crashed about 50% 20 minutes into the open yesterday. And we saw a bunch of other banks like JP Morgan certainly getting attacked in the stock market.
So yeah, we kind of saw this come out earlier this morning, but in the middle of last week, Moody's apparently said that they were going to downgrade the bank, and that kind of sparked all this. We were kind of talking about making another video going deeper into everything that happened here and kind of how we got to this point. But I saw this morning, and it wasn't really kind of coming in and out and reported before, that this might have been kind of the domino that pushed us over the edge in this case. But did you have any other thoughts or interesting kind of how we got to this point, Wolf?
Well, I think, Silvergate was also really a big story, and we saw their stock crash heavily. We saw them kind of getting liquidated, and it became curious, is anybody else going to have any attachment to this, feeling like it all kind of tracks back to FTX. But I think the big story of this morning was caused by this meltdown, and it's what a lot of people are really starting to pay attention to, especially in the crypto world, and that was this USDC breakdown that we are seeing today. First time in 3 years that it's really moved away from the dollar. This came out last night and was reported that the crypto firm Circle, which backs USDC, revealed $3.3 billion of exposure to Silicon Valley Bank. Looks like they are unable to get a lot of that money out, and that is causing the stablecoin to depeg from the dollar. It moved down all the way to a low of, I think, 87 cents, which is obviously really, really bad when it's supposed to be staying at a dollar and supposed to be super stable in that ecosystem. And there's so many things that are backed by USDC, and a lot of people that were holding it as an alternative to the dollar and as an alternative to more untrustworthy stable coins per se, like Tether. Any thoughts on that, Evan?
If you want me to be real, I don't think it's any of the effect. I think it's much more of the cause on this whole crypto area. I don't think it really matters that much in the grand scheme of things of the financial world. If I am being real, I think if you go back up, the impact that I thought was a lot more interesting here is kind of like what we're going to see next week and maybe coming. And I obviously care a lot more about stocks. So Roku, they said that they had about 26% exposure to that on their cash reserves, about $487 million, which is a lot more than the 250,000 FDIC insured limit. So you can see that when Roblox also had about $150 million at the bank. There's going to be a lot of impact and fallout coming from this. Crypto is really seeing it right here, and you could see they had a $3.3 billion exposure. How big is USDC's reserves? I would kind of want to say a number like 36 billion. So, but I don't want to just throw something random out there. I feel like I saw that recently. Maybe that was Tether though.
Yeah, USDC, I believe, has a $40 billion reserve, and 3.3 billion of that was at Silicon Valley Bank.
That's a good amount of money. That's a good amount of part of it. It might even be that like 8% that really went down. So you could see that move. A lot of stuff has to be worked and fixed in the next 48 hours, 24 hours, or else there could be the end of some of this stuff. I think, yeah, listen, these stable coins are interesting for me. Every single one that's considered safe ends up falling in the end. So I have no idea. We'll see on this one, but like some people are talking about like the banks going down and whatever, but this is one small regional bank that really played a specific niche where you can kind of see this happening in this market. I don't know if it is a full kind of representation of the entire market. So it is interesting for me to see these kind of crypto people kind of talking theirs up when Bitcoin and all this exposure is there as well. I still think everything is extremely risky at this point, but we'll see. We'll see if Jerome Powell cares about it as well. But I think we're pretty good to move on to the next slide. I think there's a lot more companies that could be affected than even just the ones we talked about. Silicon Valley held some stocks. They put out a 13F, like some other institutional investors. There was a couple other names on here, but these were the ones that I kind of thought people would care about. Planet Labs is a little self-serving at the end, but Coinbase is a large name of 406,000 shares held by them. Okta, about 112,000 shares. Also, it's also a large name. And Skills, I know, became a little bit of a popular FinTwit name. Not one that I thought a bank would be holding. There was a couple other companies that they did hold that it was like 6, 7, 8% of the company. So definitely we'll have to watch out for those and how those move. A little bit of risk there. But yeah, I think this is just kind of another second layer effect of what was happening.
Yeah, absolutely. Pretty tough to see some of these stocks that are going to be affected. Everybody's kind of looking forward to this open on Monday. And also, I think it was a great point that you made. The stock chart for USDC does basically perfectly reflect the assets that are missing at the moment. All right, here we have one more or two more pieces of data that we're just going to show. This was, reported in the news. Why you want to cover this real quick?
Yep. So the S&P 500. A lot of people might not even known that Silicon Valley Bank was in the index, but no longer. It is being replaced by Insulet, PODD, before the markets open on Wednesday. I think this kind of goes to the underlying aspect of like why this passive investing and diversification in something like the S&P 500 is good. This isn't an Apple, this isn't a Microsoft, this isn't like 10% of the index going down. But one of the names just went bankrupt kind of in the last 48 hours. And a lot of people maybe in hindsight said they could see it coming, but I definitely didn't. And the index is okay. It's going to rebalance, and in the long term, this will have a negligible to absolutely no effect on it. So watch out for this. PODD will be added to the index. Maybe that gets some movement off of this. But yeah, I think this is a pretty good case of why you kind of maybe go in these diversified areas, the indexes like this. Moving on to the last slide, I thought this one was a little bit more memey and a little bit more funny. But if you look at the Chief Administrative Officer, Mr. Joseph Genitil, I don't know. I feel like I had it right on the first one, closer. But he was the former CFO of Lehman Brothers, which, there are memes to be made for everything. But CFO of Lehman Brothers, that one's a little bit crazy.
Yeah, absolutely. We've seen the chief risk management officer of Lehman Brothers, I believe, involved with other similar cases. So yeah, pretty crazy to see the fallout that's continuing. And just nuts to put in perspective that this is much bigger than Lehman Brothers, which kind of shocked the world at the time. Question being, so many questions to answer here, right? Do we see another bank meltdown? Do we see other banks fail from this? Do we see other lenders become much more hesitant? There was a stat which we did not cover so far in this, but it was that a very, very high number of U.S. venture capital based backed companies have exposure to Silicon Valley Bank. It was an extremely exorbitantly high number. It was above 60-70%, I believe. So pretty crazy to think what the fallout could end up being from that.
Yeah, 100%. I know we have also a video that we want to go and watch in a second, just kind of showing the bank run. So we'll go to that. But I definitely do agree with you. I definitely saw that stat that you were talking about, that maybe not right now, but in general, so many of these startups and companies have had exposure to this bank. I think it kind of goes to like what this bank is, and I feel like a lot of people wouldn't have known it before unless you're in that community, just because like, you know, I'm a person like average person doesn't really kind of look into that stuff, but the exposure is quite large, and we'll see a lot of this stuff how it shakes out. It's interesting because a lot of these VCs who are most effective, they kind of started the bank run in a little bit. Now, obviously, there was underlying events and everything that happened that caused it, so they didn't cause the bank run, but they were definitely the first ones to move out. And here's the video.
Yeah, speaking of bank runs, this is one of the SPV branches. You can see here, people lined up out the door trying to get their money. Certainly a little bit of pandemonium being covered here. So I think we covered this pretty well. We don't want to speculate. We really went over all the details that we have available to us at the moment. With that being said, we are going to be making more videos coming from this. If you haven't had the chance already to subscribe, go ahead and just click subscribe on the channel. Make sure that you like this video. We're going to be back pretty excessively throughout this week with updates because who just knows how this is going to affect the stock market. I personally had to move money around today to other places just to ensure safety and security. And we're going to do our best to keep you in the loop as well with a great understanding of that. So one more time, I'm Gav from Wolf Financial. You just heard Evan from Stock Market News with us, and we will be back shortly with another video.